Hedge funds roasting on an open fire. Banks are making margin calls. This is the state of the market amid government shutdown. Bank of America's unrealized losses on HTM debt securities total $106 billion, 34% of all such unrealized losses reported by 4,645 banks. Plus, the U.S. Department of Justice escalates a probe into Credit Suisse and UBS over suspected failures that allowed Russian clients to evade sanctions. It has begun. We are in the credit event. What is going on, guys? Lottery Stocks here. Welcome back to the channel. Welcome to the channel if you're new. Today we have a lot of stuff to go over with, as you can see, what's happening with banks, potential margin calls, the state of the market, and especially AMC and GameStop. So make sure to watch the video all the way through so you don't have to watch another update video here on YouTube. All I ask in return is please hit the like button. It's just a click of a button or a smash of a button, and it helps me out. So without further ado, let's get into the video. AMC Entertainment to bring Taylor Swift the Eras Tour to over 100 countries, which that's a bold statement to make once you really think about it. Bringing it to 100 different countries, not even states, could be the major thing to clear a lot of debt for AMC. Now take a look at this. The deal comes after Wells Fargo & Co., WFC, Morgan Stanley, and MS Bank of America have sold bank level, you guessed it, bonds. Citigroup readying $5 billion bond offering as first such deal in 4 years. Banks are getting ready to raise cash. Like I talked about, we may be entering an event or something that is not good for the state of the market. And speaking of Citigroup, since we are on the topic, this was posted by Avi on Twitter. I was curious why Citi chose this $4.75 price target for AMC. I knew I saw that price level somewhere. I just checked my TA and I realized I posted that 481 level for AMC, which would be the most bearish technical level. Citi is not pricing AMC stock based on fundamentals. They are doing it based on a technical level. They want/need the stock to drop down to that level for whatever reason. This level is massively undervaluing AMC on a criminal level. Now, if you guys don't know, yesterday we talked about the price target that Citigroup gave on AMC, and AMC is currently trading at $7.97, up 0.76% on the day, and this is the target that was given to AMC by Citigroup. And with that being said, this is something that you could expect in the chart for the bearish case scenario. As of right now, we are in the most bearish case scenario with AMC. They are trying to get it as low as possible, as fast as possible. It's almost a race for revenue to clear debt and better the company versus a race against bankruptcy. At this moment right now, this is the bars pattern for the bearish setup that you could expect for AMC. Of course, catalysts can change this. One of them especially being margin calls that we talked about at the beginning of the video. Now, Cineworld announces they will not be showing the Taylor Swift Eras Tour film due to not being able to reach an agreement with the distributor AMC. They say, hey, unfortunately, we are not able to reach a commercial agreement with the distributor of Taylor Swift the Eras Tour, and therefore will not be showing this as Cineworld cinemas. Boom. I like this. AMC basically said, not gonna happen, all right? This is our deal, and this is gonna stay our deal. And for all you competitors who want in on a piece of the pie, you're gonna have to figure out something else. Now, I found this interesting as the writer's strike just ended for films. SAG-AFTRA members have approved a strike against the video game industry with 98% voting yes. Now, this was on the same exact day, September 25th, and this does not mean that they will go on strike. It is dependent on if a deal can be reached between SAG and the major video game companies. The correlation and the timing is very, very odd, and since we're talking about it, let's touch on GameStop. We still have AMC Ortex numbers to go over, but GameStop was seeing some heavy dark pool volume, but not only dark pool volume, dark pool purchasing. And when institutional investors purchase from the dark pool at a higher rate than usual, there is usually a 60-day associated positive price action as the market makers work to repurchase the shares that were initially shorted to give the institution. So maybe we get a pop on GameStop. Now, you know, for the medium term, there is a slightly bearish outlook on GameStop, at least the trend that it's going in for me. But that could, of course, change based off of what we just talked about within the 60-day time frame. And I found it very interesting that recently AMC and GameStop decided to trade a little bit off, right? The algorithms were programmed to where they would peak together, they would valley together up until about March 2023. And I wonder why that is. I just found it very, very odd. One peaked earlier, one peaked later, one valued earlier, one valued later, and it varies, right? And AMC has been in this most disgusting disgusting sell-off, and GameStop has held up sort of well, which leads me to think that either they can't push GameStop under the previous lows, under the relative lows, they physically can't, whether that be because of DRS shares or not, or GameStop is about to have a bad sell-off to the downside following AMC, right? Because one follows the other, and this sell-off from the peak to where it's at now was a sell-off, but about half the degree, right? AMC dropped about 80%. GameStop dropped about 40 here. Touching on the Ortex numbers, 12.53% short interest for AMC, 55% utilization, and the cost per average at 4%, and the max at 11%. You guys want up to 16 free stocks, each valued up to a couple grand per stock, a guaranteed Tesla or Google stock, and $50 sent to your account to trade with. All you have to do is use my link in the top of the description or pinned in the top comments, sign up for Moomoo, and once you deposit even $1 into your account, you are going to start earning benefits from there. So go to that before September is over. Plus, you're getting free level 2 order book data, access to trading options, going long, going short, viewing other exchanges, a customizable earnings calendar, and more. Also guys, if you want to pop in the Discord, I'm in there on the daily. I post my trades as soon as I take them. We talk stocks with 500 of the most amazing people. This is the place to go. If you're not in any Discords, just join this one. Try something new. Maybe you'll benefit from it. Who knows? It's $1.99. You really don't have much to lose. Get in there. These are the benefits down here. That link is right with the Moomoo link. Now Target said it will close 9 stores across the country after struggling with crime and safety threats at those locations. FTC has just sued Amazon in landmark antitrust case over Amazon's marketplace. They allege that Amazon is a monopolist that stifles competition, and they say that Amazon puts its own products above others. ChatGPT parent company OpenAI is now looking to sell shares at a $90 billion valuation, and Apple is getting looted in Philly. Plus, Goldman Sachs is warning that multiple US government shutdowns are possible, which brings us to the S&P 500. Trading at 427.30, up 0.33% on the day. I want to look at the previous Septembers. We dropped 20% back in 2018, about 10.57% in 2020, 6% 2021, 19% in 2022, and we are currently down 7.65% in the September-October cycle that the market ends up going through. So when is the bottom going to hit? Well, based off of the previous sell-offs for the September-October cycle, this is where the SPY could come down to. I think the SPY is going to fill the gap right at 423-ish either way, so I think it is going to come down to that level, and either we end there and get that slight sell-off right around 8% on the SPY, that slight correction, or history rhymes. And the levels I would watch is 410.50 and 370. Those are the slightly more and more bearish levels that we have for the S&P 500, and then if we go lower than 370, we are officially in a bear market, like a legitimate bear market, and we won't know how long that is going to last. However, the SPY is below the bottom of the Bollinger Bands, which means it's likely oversold at least in the short term and may get a relief rally. Plus, the VIX is above the outside of the Bollinger Bands, which also means that the SPY could get a relief rally pretty soon. But the VIX is at an important level, trading at $18.71, touching previous resistance, and I would think this is more so a crash if Bitcoin was crashing, but it's kind of holding up decently, sitting at 26,000. So I think this correction won't last, and it's a good idea to dollar cost average, but who am I? I'm just a dude on YouTube. None of this is financial advice. I'm not a financial advisor. That is what I got for you for today's video. Hopefully you guys enjoyed watching. Hit the like button on your way out. I love you all. Lottery Stocks out.